Hey everybody, Spartan here from SpartanTrading.com. I wanted to take a moment to talk to you guys about something that I think can really help people from a psychological standpoint, especially out the gate every single day if you're a day trader in the morning. You can also do this on the swing side as well. But what I want to talk about primarily is setting yourself a pivot point. And what I mean by that is not an actual pivot point indicator, but a point on the chart where you pivot or change your decision from being bullish to bearish. So what can that look like, and what does that look like, and how does it actually help a trader? So there's something that I like to call just the pivot point every single day. I'll go through my morning charts, I'll chart my support resistance levels, and I'll chart out a pivot point on every single ticker that I'm looking at in the morning. So I'm always doing it on the SPY, the FANG, the individual names, for the group or for the traders in the room, as well as I'm just doing it for myself because I need to know where these levels are. And this level acts as a area that I can go, okay, if this level crosses to the downside, I'm now bearish. This level crosses to the upside, I'm now bullish. Now, this is a great day to be looking at something like a pivot point where I've been bullish on the market for God knows how long, for the longest period of time. I mean, in the short term, for about, I'd say 2 weeks straight, basically, being bullish. And today was the first time that I was leaning more bearish on the open, looking for a little bit more of a pullback. And what happened was this morning, this was my pivot point. It was the level right here, the 356. I think I had 356.60 as the level, and basically when that level broke to the downside in the pre-market and was unable to get a bounce right out the gate, I started to lean into puts immediately on the market because I figured, okay, we're probably going to continue to sell off, or we're going to have more of a bearish mindset. Now, the great thing about a pivot point, like I said, is if you get a pivot point crossing to the upside, you can flip to a more bullish mindset. If it's a bearish cross to the downside, you can have a more bearish mindset. It doesn't matter what the market's been doing in the recent term. It just matters what it's doing intraday at that point in time. So it's just a psychological level that can help you. It was the same thing on Nvidia. This was my line in the sand of being bullish or bearish. Right out the gate, was unable to hold the 360 level, or the 359.60 was what I had. After that level broke, we were in puts immediately the entire day. We swung some actually overnight. And we're saying, to short the equity, etc. Now, after you get a pivot point cross, you can start just using trend lines intraday or EMAs, whatever you want to stay within the position you're in. But that pivot point can help you make the decision to get short or get long in a position if it does get across to the upside or the downside. So just a quick little tool that you can set up for yourself every single day intraday. I think it's a very good point to have on your chart when you are, especially if you're trading off of technicals, just because from a psychological standpoint, it can help get rid of that bias where you go, okay, well, the market's been bullish. I think the dip's going to get bought up. But then you go, no, it's below the pivot. It's actually got more room to the downside according to the technicals, and price action never lies. That's what you want to follow, not what you think. It's what you see, right? So anyways, just a little bit of a kind of a pointer that I always do every single day. I think it works tremendously well, and it's a great concept to apply. So something that you guys can look to use in the future. If you guys are going to be using it on the swing area, on the swing charts, then obviously you're going to be doing it on a more of a big time frame. What I'd be just looking for then is just really major support or resistance levels. I probably wouldn't even use a daily. I'd probably use a weekly or a monthly to get a pivot point. For instance, if the SPY crossed the 338.43 level to the downside, I would be bearish on the market because I think it broke below a major range break to the upside. So it's going to start to come in and sell off, either to the uptrend or, what have you, whatever support. So you can do it that way as well. Anyways, just a quick little pointer, guys, for you guys. If you have any questions, feel free to reach out, SpartanTrading.com. Otherwise, thanks for watching, and I'll see you guys next week. Have a good one.